And thanks for jumping back into the cryptoverse. Today was obviously a pretty intensive day. So let's just go ahead and dive right into the Bitcoin charts. If you guys like this content, please subscribe to the channel. And also feel free to check out the Telegram channel in the description below if you'd like to discuss these more in real time. Um, but to bring you up to speed, we had talked about this 20-week moving average for a long time. And, we talked about how if we break it, then typically we move down, and you can see last time we had this candle, which felt very strong, which pales in comparison to what we experience today. And we shot right by the 100-week moving average. We went down to the 200-week moving average, and I think a lot of people had buys there, which I think was probably a good thing because we did see a bounce off of the 200-week moving average throughout most of the day. But then, of course, we saw a huge sell-off going below the 200-week moving average, all the way down to what we had identified as the next, main layer of support, which is the 300-week moving average. And, we've never actually tested the 300-week moving average, and I just want to pull up the BLX here, because one of the things that we can see with the 300-week moving average, or at least say the progression of this, and we have talked about this a little bit before. So let's go ahead and change this 20-week to a 100-week, so we can kind of see how things have played out over time. If we go all the way back in time, you could argue that the 100-week was sort of our support for that first cycle, and then the second cycle, the 200-week acted as support. And we have said in a few videos that it's possible that we don't hold the 200-week moving average, and that we maybe we drop below it down to the 300-week, and that would be somewhat poetic in a sense of if each time we kind of drop down the ranks, because we already know that the 200-week moving average can't hold forever. It's not possible for it to literally hold forever. But the question is when would we break it? Now, you could argue that we actually haven't really broken the 200-week moving average yet, because the weekly candle has not closed. And for those who think we've never broken the 200-week moving average, I will point you to Exhibit A right here, Exhibit B, Exhibit C, and then there's probably a few more exhibits in here you can see. So it's not that we haven't ever gone below it, it's just that it more or less acts as that support region. And you can see a lot of wicks that go below it. For instance, back in January of 2015, we had a wick that went down to 162, and the 200-week moving average was at 193. So even back then, you could say that we broke the 200-week moving average. But for the most part, people will say that the 200-week moving average is that level of support, and I would agree. You don't, you look at the general trend and can see that the 200-week moving average is ultimately where Bitcoin held support. And then here, back in 2019, this is where we held support. And so this data actually doesn't update quite as frequently, but you can see that we came straight down to the 300-week moving average, and we did identify this as the next layer of support. So I know that at least I had a buy set up there at around $3,900. We were doing live risk updates in the private Telegram channel. If you want to join it, just either join the Patreon account or contact me on Telegram, and you can pay with crypto. It's not that expensive. And we were doing live risk updates. The risk level at the 300-week moving average, for those who are curious, and I actually did post one update in the public group, but at the 300-week moving average, the risk level was around 0.12 or so. And this, and I've often talked about how when we get to these risk levels, we don't normally stay that long. And every time we get there, people tend to think that Bitcoin's going to zero. But we usually don't stay that long, and it always seems like in hindsight, oh, I should have, people might say, oh, I should have bought. But it is hard, we'll admit it. I mean, it is hard to buy when you see the price of Bitcoin, like, what appears to be crashing. Now, with all that said, we have to also take a step back and realize that some market conditions are different than they have been in the past. Bitcoin has always been accompanied by a bull market with traditional markets, and this is the first time that we're potentially entering a recession. We're already in a bear market. The Dow Jones went down another like 2,300 points today after being down around 2,000 points yesterday, and we have officially entered a bear market. And the Nasdaq and the S&P 500 have as well. And what that means, by the way, that most people measure it as being 20% down from the all-time high. Now, obviously, we're much further than that now. And I'm talking about traditional markets, not Bitcoin. Obviously, being 20% down from Bitcoin, Bitcoin's all-time high is just another day. It's just a Tuesday in crypto land. So, I would like to highlight the fact that in terms of the traditional markets, coronavirus, and we've been talking about it, it is going to, and it has obviously, it's going to continue to impact global markets, and there's no, it's fairly obvious because the economies, the cities all over the world are just shutting down essentially. There's cities everywhere that have turned into ghost towns. A lot of small businesses are having to close shop, and they're not going to make it through the recession, if they're or what we think will likely end up being a recession. It's just they're likely not going to make it. And a lot of times when people are in these situations, they need cash because they're not getting it from their business because people aren't buying as much. And so they tend to liquidate their assets. And the ones they tend to liquidate first are their high-risk assets. And crypto obviously falls under the high-risk asset category. And remember, we were saying that if we drop below the 20-week moving average, then we would expect Bitcoin dominance to really move up. Even though the price of Bitcoin would fall, altcoins would fall harder. And I think that's pretty much perfectly played out. We continue to see altcoins lose more ground than Bitcoin. And it's just the nature of the cycle. If we're below the 20-week moving average, you can see this play out. And I know some people have been skeptical about the 20-week moving average, and some people will say, well, why don't you use the 21, or why don't you use the exponential moving average, or whatever it might be. At the end of the day, you can use what you want. I'm just saying I use the 20-week moving average, and I think I've provided fairly solid evidence over the last few months, and many of us have lived it, that when we get above the 20-week moving average is when altcoins tend to shine. And when we're below it, you would expect Bitcoin dominance to go up, even if the price is going down of Bitcoin. Because if Bitcoin's going down, other coins are going down. They're crashing much harder. So typically, what I do for those interested is if we do go below the 20-week moving average, and I don't think I have to spell this out for most people, but the idea is that a lot of my altcoin positions are converted to either Bitcoin or stable coins during that time, and we've talked about that in other videos before, but going below the 20-week is certainly a time to consolidate your positions, because when we go below the 20-week, or we're holding it as resistance until we get above it, it's not a good time in the crypto markets. So we came down to the 200-week, and then we held above it for most of the day. Then we came down to the 300-week. I know several people in the private Telegram group were able to execute buys at this level, which had a risk of 0.12. We were there for a few seconds, and we've popped back up. Now, with that said, we're not out of the woods yet. The volatility that we saw today is almost unprecedented. I mean, dropping 50% in one day, and I know currently we have rebounded a little bit, but dropping 50% in one day is truly remarkable. And you can see the effects that the economy is having on Bitcoin. People are not necessarily ready to say, this is a store of value. Let me just throw my money into Bitcoin. No, a lot of people are taking the more pragmatic approach of I need cash on hand, because at the end of the day, the person down the street where I buy my groceries doesn't accept Bitcoin, and I need to make sure that I can, take care of my family or whatever it might be. With that said, the next several months, as we've mentioned in 2019, as we've mentioned in 2020, that these are likely the best accumulation years of the market cycle. Even we said early 2021 as well. I stand by that. I do think that eventually, I mean, it's obvious that eventually the effects of coronavirus will start to dissipate. However, that could be a long time, and I certainly don't expect the daily routine of people who live in countries all over the world to get back to normal anytime soon. It seems like a lot of things are just now picking up, and I do know in some places some people are starting to head back to work. But you also have to wonder if the coronavirus will start to make a comeback once people start mingling again and get back to their everyday lives. So, it's obviously a huge possibility that we'll continue to see suppressed prices in the crypto markets for the foreseeable future. And we don't expect really much otherwise. And in fact, I would have been absolutely shocked if we had gotten to 20,000 in 2020. Just because even as we've said, even with a 4-year cycle, we wouldn't have expected that. And on this channel, we more so prescribe to the lengthening cycle theory as opposed to the 4-year cycle theory. And I'm sure many of you guys are probably rolling your eyes at that. But I do support the lengthening cycle theory. I don't think that Bitcoin is peaking in 2021. I think we have a long way to go ahead, a long road, 2022, 2023, maybe even 2024. But I think that it's still going to happen. It's going to be a long and painful road to get there. And the key, right, and we've talked about this before with, say, the risk metric that I've published, is that one idea is to dynamically dollar cost average your buys. And what that means is when the risk level is, say, between 0 and 0.1, you're buying, you're weighting your buys a lot stronger. When the risk is between 0.4 and 0.5, the weight on those is not nearly as high. And the downside to this strategy is if you start it in a bull market, then you're probably going to miss out on a lot of profit. So like if you were to say, okay, I'm going to follow this strategy, and what I'm going to do is I'm going to dollar cost average my buys, and okay, I'm going to start it. Okay, the risk is 0.4 to 0.5. The risk is 0.45, so I'm going to put in the smallest amount. And then if the risk just goes up to 0.9 and then you sell, well, then obviously you've missed out on a lot of gains. If you start this strategy during a time where the risk is, say, between 0 and 0.2, then it's a lot easier to follow because, whatever you're putting in 1 month, if the risk continues to move up, because it's hard to get too much lower. Obviously we have not gotten to the risk region of 0 to 0.1 yet. And in fact, to get there, we would need to drop, I think, below around $3,500 or so. So essentially, if we drop below the 300-week moving average, then you could equate that to a risk level between 0 and 0.1. If it happens in the short term. If it happens in 4 months, then obviously the risk would be completely different because it's a function of a lot of other things. But if it happens in the next, say, few days, then that would be the risk level. So you could think of it as, okay, well, 2019 was my accumulation year. Now 2020 is an accumulation year. And to some degree, the beginning of 2020 is looking somewhat similar to, say, the end of 2018. And we're seeing very low risk levels that when we see them, they don't tend to last very long. And while that has historically been the case, it's important to remember this is not financial advice. You do need to consider the fact that if the world enters a global recession, then market structure of Bitcoin could be called into question. So don't invest more than you can afford to lose. If you are making investments at these risk levels, then I think you stand the most to gain. During a subsequent bull market, if and when that occurs, because you were the one buying when the risk was low. Now the question is it going to go lower? Is the price going to go lower? We could test the 300-week moving average again, which, if you're not aware, is around $3,700, around that region. It's around. You can see it's 37.85. So the 300-week moving average, 37.85. The 200-week moving average, 5,500. So we will keep an eye on that. The 400-week moving average, if you're curious, I think is around $2,900. But regardless, if the idea is to dynamically dollar cost average your buys, then you're gonna be putting in less at, say, the 100-week moving average than you were at, say, the 200-week moving average, and then you're putting in more at the 300-week moving average. And the 300-week moving average, remember, corresponds to that risk band between zero point 0.1 to 0.2. Okay, and then the 100-week the 20-week moving average obviously was a lot higher, because the Bitcoin risk just a few weeks ago at 10.5 was around 0.45 or 0.43 or something like that. And if you were buying then I would have said, if you're dynamically dollar cost averaging your buys, you should be putting in the lowest amount in this region. And if the risk drops below 0.4, then you could dollar cost average 2x. So if your 0.4 to 0.5 is, say, x, then 0.3 to 0.4 is 2x. 0.2 to 0.3 is 3x. 0.1 to 0.2 is 4x, and 0 to 0.1 is 5x. That is one strategy, and that's typically what I stick to. So that's just one strategy. Obviously, you could take the static approach and just do a certain amount each month. But I can tell you this: if you need the money, if you're putting in money and you're going to need it in 3 months, then this is probably not the right strategy for you, because the focus of this channel, right, is the macro level picture. And we like to take advantage of moves in the market where we see dips like this. I mean, this is honestly just incredible to see this. Let's just take a measured move here. And if we take a measured move, and let's zoom in, and let's take today, or this, this basically all happened today, or more or less. We came down like 50% in one day. Just think about that volatility, and we have rebounded, but that is incredible. And it also, at the same time, while being scary, it also presents a unique opportunity, just like this presented a unique opportunity, and this wick over here presented a unique opportunity, and this over here was a unique opportunity. All of these levels corresponded to risks, getting into the 0 to 0.2 range, and the time we spent in that range varies between each cycle. It's possible we spend 1 day there. It's possible we spend 4 months there in this cycle. It's hard to say. Currently, if you look at the risk region between 0.1 and 0.2, so we were only at the risk level of 0.12 for about 10 seconds or so before it shot back up. We went from $3,700 or $3,800 around that region to $5,500 within about 2 minutes or so. It was a very quick move, and I'm sure a lot of people sold at around that point. They capitulated, and then they saw the price go right back up. So consider the long-term moves. If you are going to find yourself, if you think you're going to be the person to capitulate if we were to come back down to this level, then you need to consider your current position, consider the risk level on your current position, and make choices appropriate for what you're okay with. And then if you think, okay, well, it's possible we're going to go into a recession. It's possible that Bitcoin's prices are going to be range bound, between a few $1,000s, or just say around a few to several $1,000s for the next year or so, and you're not going to get super bent out of shape over if you buy at, say, 4,000 and it goes to 3,500, or if you buy at 4,500 and it goes to 3,500. If you're not going to get bent out of shape about that, and you can look past that and forgive yourself for not timing the bottom, then I think this could present a unique opportunity for the next several years looking out. Because if we think about this, this clearly looks terrible, to be quite honest. But until we really see what's happening over the next few weeks, it's hard to make an informed call exactly at this point. I do want to show one other thing. So I made this chart yesterday actually. I actually uploaded a video to YouTube and I set it to private and I was going to play it today for everyone. Um, the downside is when I do that, and it often works out because most of what I do is macro level analysis, which is not too sensitive to daily price moves. But every once in a while, I have to essentially delete the video because it almost becomes irrelevant just after a day. So what I was going to do is I was going to show this chart, and this is earlier in 2020. We talked about being potentially range bound by this yellow line, because if you looked at the last cycle moving into the halving, we were between this orange red line here, orange line, and the yellow line. We were in between that, in those log lines, for over a year. And it wasn't until the bull market, the bull market started in 20, much earlier in around 2016, early 2016, but it wasn't until 2017 that we really broke out. And then we said, okay, well, maybe this yellow band will act as resistance again, and it did. And if we updated it, this is updated to price data excluding today, okay? I'll show that one next, okay, but this is excluding today. The video that I had uploaded where it basically said, okay, we have two options here. We're either going to hold this one as support, we're going to hold the 200-week moving average as support and potentially bounce back up, or we might fall below and ultimately maybe test this lower band. Now, these are imaginary lines. You need to understand that. The point of them is to just show where we might be within a speculative bubble phase. And if you look closely, you can see that during the first market cycle, we held the yellow band as support here. During the second market cycle, we held the orange band as support. And we did mention the possibility of potentially falling again. In the same way that the peaks fall down around 2.5 log lines each peak to peak, it's possible that each bottom is falling down a log line each time as well, and that maybe we would go to the blue line. But clearly, I couldn't really say one way or another if we were going to hold it at this level or if we were going to fall below. But if we did fall below, we were going to be prepared for it because we had the updated risk stuff, and we wanted to take advantage of that. And if we update it, that is what happened. Okay, this is what happened in the last day. Okay, so you would actually be hard pressed to find something that even remotely resembles that type of move anywhere in the history of Bitcoin, which also says, okay, guys, Bitcoin is dependent on traditional markets. While Bitcoin bear markets are not necessarily correlated to the S&P or traditional markets, you can sure as hell bet now that if the traditional markets are entering a recession, then Bitcoin has shown that it's also going to respond in a negative way as people liquidate those high risk assets. So we have fallen sharply down. We have not fallen below this band yet. If we did, we would have to, okay, so this is around, so that this band here is around $4,000. Okay, and remember the 300-week moving average is just shy of $4,000. So it is possible, that the 300-week moving average does hold as our support, and that we continue chugging along through this region for a long time. And if we were to fall into this region and stay in this region, well, we've already fallen into it. If we were to stay in this region for the next, year, let's just see what our potential fair valuation would be in this region without a speculative bubble. You can see that we wouldn't even get to a price of $20,000 until 2022, which is more in line with the lengthening cycle theory, thinking that it is going to take longer to see this peak. So while it's certainly hard to say whether or not we'll stay above this line, we will obviously keep an eye on it, and if we fall below it, then the risk level will also be among the lowest it's ever been. So it'll be between 0 and 0.1 if we fall below that line. And again, it's only going to really benefit the people that, assuming there's a bull run, it's only going to benefit the people that can really see the deal and try to look out far into the future and know that Bitcoin is not done and that we're just experiencing a recession. The coronavirus is slowing the global economy. The doubling rate of the coronavirus, if you've seen my other videos, is currently around every 4 to 5 days, not including China, so everywhere else in the world. The doubling rate is currently around every 4 to 5 days. And if we continue growing at the rate that we're growing, then we're going to hit 100,000 cases in a couple days worldwide, not including China. I realize that these is a lower bound and that likely it might even be an order of magnitude higher than that just because of people unable to test. But just based off the data, that is what it says. And then it would say that by the end of March, we'll be at 1 million people if the exponential growth curve continues the same trend it is. So that's a big if, but if it does, businesses, traditional markets are likely not going to be recovering anytime soon. And there's going to be a huge question mark next to the cryptocurrency market and of course Bitcoin. So I hope that has been informative to everyone. I know some of you are probably having a hard time right now, and this is not, this is obviously a serious time. We want to be serious. I want to remind you this market can be brutal. It can be very volatile. Opening long positions or even short positions with a large amount of leverage is very dangerous, and you can lose a lot of money that way. You can lose a lot of money even without leverage. And adding leverage is a lot more, you're stacking a lot of layers of risk. And while it can be lucrative, a lot of people do lose a lot of money doing it, which is why I'm not spamming any leverage trading referral links or anything like that. We want to provide quality analysis without something that is obviously some random referral link shill or something along those lines. So. We will obviously continue these videos. I want you guys to stay updated. I would again appreciate it if you subscribe to the channel, join the Telegram group. If you want to be more involved, have more access to the risk metric and be in a private Telegram group where we do have a lot of really good discussions. It's a good way to filter out a lot of noise and really focus in on what's happening in the market. So if you want to do that, then contact me on Telegram or something, and we'll figure it out. And I will talk to you guys next time. Bye.